Hello there, Nick Vail here, as always, helping you live your best financial life. Did you know there's an election coming up? I'm sure you're like me and you've been bombarded with information about how the election will affect every aspect of your life. I've been asked many times about how investments should be adjusted with an election approaching. Let's take a look at a few visuals and then I'll give you my thoughts on how your investments should be positioned this election cycle. Let's first look at a chart of the S&P 500 from 1927 through 2020. What we see here is that over the long term, the stock market has trended up and to the right. I point this out because there have been dozens of elections during this time, wars, and other negative domestic and worldwide events. We've overcome all these events, and the market has continued to provide returns. So that brings me to the questions I get most often. What happens if blank wins the election? Should I move to cash right now? The good news is that in modern history, markets have rewarded long-term investors under just about every presidential term. And before coronavirus halted our way of life, the economy looked healthy and was trending in the right direction. The key here is on long term. Every single one of these presidential terms was subject to volatility. Short-term market corrections should be expected, and they shouldn't scare you away from investing. As you've seen in these charts, short-term speed bumps are a feature of investing. If you stick with a long-term plan, you'll be just fine. I've also been asked how markets perform under a Democratic president versus a Republican president. Should you alter your strategy depending on which party wins? We've historically seen positive returns no matter which party wins. You shouldn't completely alter your strategy based on whether a Democrat or a Republican wins an election. Certainly, with elections, we know that tax changes can soon follow. Tax policy change can alter some aspects of how and where you invest, but it doesn't change if you should invest. The last image we'll look at is how markets have performed based on the breakdown of political party control of the White House, the House, and Senate. I'm sure I seem like a broken record right now, but again, we see that under each scenario, markets have been positive on average. So what does this all mean? In the short term, could we see volatility and even negative market returns? Of course we can. But we also have to condition ourselves to realize that there will be market corrections and negative return years as part of our investing journey. Expect it, don't overreact to it, and you can even look for opportunities during those times. Now on a macro and long-term level, markets have weathered many different storms and continue to reward those that invest with discipline. Our view is that with a strong financial plan, you should be prepared for different types of market environments. If a near-term negative market is going to cause you to lose sleep, well, then you shouldn't have been invested that aggressively to begin with. Get a handle on how much risk you're comfortable with, invest accordingly, and then monitor your portfolio to make sure that risk level isn't swaying too far in either direction. Don't forget that headlines bring ad revenue, and prudent decisions don't sell. Stay disciplined, stick with your long-term plan. If you do that, you'll be on your way to living your best financial life. Have a wonderful day, and I'll see you next time.